Hello traders, Joseph here again. Thank you so much for joining me on today's video. So what I'm going to be doing in this video is I'm going to be breaking down my strategy a little bit just to give you so it's kind of going to be like a tutorial where I kind of talk about a small part of my strategy, and obviously before I get into this video I want to just take this moment to thank you guys so much for the support I got. As you all know, I started my Zoom trading classes today, and I was not expecting to get too many people in the class, and obviously the reception I got after the first lesson, which I'm gonna read to you guys some of the messages that I got, and it was really heartfelt. So I thank you guys for your continued support, and because of that I'm gonna actually do this video and to try and show you guys what you can expect basically. So what I'll do is I'll bring up the course schedule, and I'm gonna take a couple of things from the course schedule and kind of give a tutorial about it. And what I'm gonna talk about is basically from the structure part. I'll take the bullish, and then I'll talk about that in combination with the imperfection rule from the 1 2 3 contraction. So just to kind of give you an idea of what you can expect. And and obviously, like I said, when it comes to the structure and the bullish bearish and consolidation, that's something that probably any trader should know. I mean, if you're into especially technical trading, then you should know those kind of terms. They shouldn't be terms that you're not familiar with. So I'm gonna go over to the chart, and the first thing I'm gonna do is I'm gonna get a blank canvas, because I like to have everything to be, because I'm gonna be doing some drawing. That's the reason why. We're gonna get back to the chart later, so don't worry about that. But anyway, so I got a blank canvas here, and I know I've talked about this bullish structure and bearish structure at least a couple times in my videos, but I'm still gonna talk about it today because the point I'm gonna make is relevant to the bullish structure. So that's why I wanna talk about it. I mean, if I just make the video by just talking about the other part, then to some people it might seem confusing, but I want to be able to link the 2 points together just to kind of give you an idea of what I'm talking about basically. So I'm gonna go ahead and get some lines on the chart. I'm gonna select green because I'm gonna be talking about bullish structure. So if I ask you what a bullish structure is, I mean, a lot of traders probably have like a vague idea, which obviously they're still going to be correct, but as a trader I try to get into the technical specification of everything. I like everything to be able to be defined by clear rules basically. So if I was to give you a clear explanation of what a bullish structure is, so I'm going to start off with some diagrams on the chart. So we got an impulse leg here, and we're gonna put some label in here. So I'm gonna put this as a starting point. You can call it X or whatever if you want, but I'm gonna call it the starting point. And right at the top of the starting point is what I call the initial structure high. So initial structure high, and then after that obviously we get a little pullback. We get a pullback, and this pullback is known as the outside return, or you can just call it pullback if you want, but I'm gonna call it the outside return. And then after the pullback we get another impulse leg, creating what we call a new structure high. So this is what a bullish structure look like. However, you need to have clear rules in order to make everything so technical, because you need it. So the first thing I'm gonna do is I'm gonna introduce another line here, and it's gonna be a dotted line at the bottom right there. So I'm gonna put a straight dotted line at the bottom there, and then the reason I drew this line is because this is very important to the first point that I'm going to make, or the first rule of what a bullish structure look like. So the first rule of a bullish structure is that the outside return of a bullish structure, it must not touch the starting point at any. It shouldn't touch, it shouldn't cross, it shouldn't exceed. It can come as low as possible to that line, but it shouldn't touch the starting point. And if that happens, then you have a valid outside return of a bullish structure. I hope that's clear to everyone. Yeah, some of you already know this, like I said, because I've already explained this at least a couple times in my previous videos. So if we're going for the second rule, so there's two rules to the a bullish structure, and this is the second rule. I'm going to need that line as well. So the second rule of a bullish structure is that the new structure high must break above the initial structure high. Now at this point, it doesn't matter what part of the candle of the new structure high it is, as long as that part of that candle goes higher than the initial structure high, then you have a valid new structure high for a bullish structure. So I'm going to leave that just high up there, and we're going to come back to that in a little bit. So what I'll do now is I'll move my chart to this side, and I'm going to introduce something that might seem a little weird. I'm going to put a vertical line right here at the middle of the screen, and I'm going to do some drawings on the chart here. So first of all, I'm going to put A right here, just make that nice and big. Got A, and we got B on this side, and then I'm going to do the same thing on the opposite side as well. We got A and we got B. And I'm going to do some drawings on the chart here. At this point, people are thinking like, what the hell is this guy doing? What are you drawing in the chart? But don't worry guys, it's gonna make sense to you guys a little bit. Some people can already tell what the point I'm trying to make. So you're like, oh, he made a mistake. Yes, it's not a mistake, but like I said, it's gonna start making sense to you a little bit. We're gonna move on to the second part. Okay, so I think I'm done with the drawings. I'm gonna make a very important point here, and by the way, that's what we just talked about earlier. This is just the bullish structure, right? At this point in time, we're moving on to the part where I'm gonna explain the imperfection rule, the imperfection rule of a 1 to 3 contraction. So if you look at the two sets of diagrams of both of A and B, and if I was to ask you just a simple question, like what sets of diagram would you consider have like, you know, the drawing, what sets of diagram would you say looks perfect? And we clearly know that none of these pictures, for example, if you're looking at the sets of diagrams on A, we can see that none of the circles are perfectly identical to each other. So you can't really say the word perfect if you're just looking at the pictures of sets of the on set A. But if you're comparing it to the pictures on set B, it's perfectly, normal to say that the pictures on set A are more perfect than the pictures on set B. Obviously, looking at set B is the only circle where, if you look at the second picture, you can see that that circle kind of comes in and touches that line, while in set A, every single one of them, I mean, it's not exactly the same, but they're perfectly imperfect. If that makes sense to you. If that doesn't make sense to you, then look at the sets of pictures on the other side, where we have these 3 lines. So if you look at these 2 pictures, if you're comparing A and B, you can definitely say, okay, the pictures of A are more perfect compared to the pictures of B, even though in actual sense they're not really identical to each other, but it's just that they have a pattern and they all stick to those patterns. They follow that pattern, they respect that pattern, so we can call them perfect in comparison to the sets of pictures on B, even though in actual sense they're really imperfect. They're perfectly imperfect. So if that doesn't make sense to you again, just stay with me. We're gonna move on back to our bullish structure, and I'm gonna put 2 more diagrams next to this bullish structure. So I need a blue one, so I'm gonna go for a blue one here, green one, sorry. I'm gonna draw a couple more bullish structures here. Couple more bullish structures. I promise you, by the time I finish this, it's gonna make a lot more sense to you. What the previous pictures I showed you is gonna make a lot more sense to you. So let's bring in the red dotted line here somewhere at the bottom, put it there, and put that one there as well. Just trying to make it straight. And then let's bring in our blue line, that goes here, and another blue line that goes here. So we're talking about, now we bring in the I have to label the points. So we have SP, we have ISH, initial structure high. I'm just going to put abbreviation instead of the full labeling, outside return, and we have the NSH, new structure high. So the new structure high goes here, outside return comes down here, initial structure here goes up there. So I'm just gonna clone this because I don't want to be typing them again. So I'll clone that and then do the rest as well. So now we have 2 more bullish structures next to the one I just drew. So if you look at these 2 bullish structures and you think back to the pictures that I just showed you on this side, what you're gonna see is the fact that this rule that we had at the beginning is so important, because if it wasn't for this rule, a lot of people are going to look at these pictures and say, no, they're not the same, but in actual sense, all these 3 pictures are the same, are identical in an imperfect way, because of this rule. This is able to help you kind of see these things and be like, okay, yeah, this is a bullish structure, this is a bullish structure. And the whole reason I'm doing this is because when people start reading structure, when people start doing technical analysis, especially new traders or traders that don't have too much experience, they find it very difficult to kind of program their brain in a way to see things like this. Because normally if you start looking at charts, for example, straight away after, if after the first picture that I showed you, if I showed you this and I said this is what a bullish structure look like, okay, go look at a chart and try and find some bullish structures on a chart. Your mind straight away is going to be looking for things like this, things that look exactly like this, but it's not going to be thinking about these kind of things. Because I can show you right now, we're going to go over to the charts right now and I'll try and find some examples, and I can promise you that you're going to see so many bullish structures that you never even paid too much attention to. But this is the way to program your brain to be able to see like this, to be able to think like this. Because so many retail traders have a simple way of learning, where they learn the same thing everywhere they go, and for that reason it's very hard for them to kind of adjust, to kind of train their brain to see things that the normal traders don't see. So if this still doesn't make sense to you, we're gonna go over to the chart, like I said, and I'm gonna show you guys some bullish structures that you've probably that you didn't even know they exist on the chart. So I'm gonna pick up just a random let's go with the Nasdaq 100. I'm gonna bring back the chart, so I'm gonna put this on a 15-minute time frame. 30 minutes is fine or so, but I'll put it on a 15-minute time frame and look at this market. So why don't we try and find some bullish structures here? So straight away at the current, what the market is currently doing, you can see already we have our starting point, initial structure high, outside return, new structure high. That's a classic, very good looking bullish structure, but it's gonna get complicated, so stay with me. So somewhere in the middle here we have another bullish structure. Starting point, initial structure high, outside return, new structure high. Starting point, initial structure high, outside return, new structure high. Starting point, initial structure high, outside return, new structure high. Are you starting to see the bullish structures on the chart? We have another one. Starting point, initial structure high, outside return, new structure high. Does that look anything close to the first picture I showed you guys? Absolutely not. But is it a bullish structure? Yes. It doesn't have, that's what I'm saying, it doesn't have to be. You have to train your brain to see, just have, as long as you have that rule at the back of your mind, you know what you're looking for, you know what all the conditions that the market needs to meet before you find a bullish structure, then it's very easy. When you go over to the chart, your mind already knows what it's looking for. Like I said, right now I'm only interested in the bullish structures because I just even know a bullish structure, so I'm not gonna try and find, of course, if I'm looking for bearish structure, I can see lots of them on the chart, but we're sticking to just bullish structure. We got a starting point here, initial structure high, outside return, new structure high. Like this is very, very important to the strategy that I trade, because this is a very key information. Being able to identify this and then move on to what the signs you're looking for, the technical specification or the technical conditions that the market needs to meet before you actually even place a trade. This is very important, and all my students, like, by the time they finish my course, they're gonna be seeing this everywhere on the chart. They can find it very easily. You can wake them up in the middle of the night and they can still see this. They're everywhere. Starting point, new initial structure high, outside return, new structure high. There's a bearish one here, but I'm not going to talk about that because, like I said, I'm only looking for the bullish structure. We have another one here. You can see how different they all look. Starting point, initial structure high, outside return, new structure high. They all look different. They're never going to be the same, but as long as you have that thing at the back of your mind where this is what I'm looking for, like, this is the rules, this is, I know my mind is programmed to find things that are not perfect but still perfect in a way. Yeah, so I think that's probably enough examples for you guys. It's gonna be a lot easier for you guys when you just go start looking at the chart and start trying to find all these bullish structures, and you're gonna see how easy it is. But yeah, so that's all what the imperfection rule is. And like I said, and the bullish, yeah. So this is it, guys. And for those of you that still haven't signed up, then you still, I mean, like I've only done one lesson, so it's not like and I'm gonna be repeating that lesson next week as well. And just to kind of read some of the information that I've got from you guys, some of the messages that you guys have sent me, because yeah, based on the feedback from today's call. So this is from a guy called Michael. Hi Joseph, I attended your class this morning, and I just wanted to let you know how glad I am to have come across your YouTube page. I really like the way you teach, and I hope you will be my trading mentor. And yeah, this is from Julia. Hello Joseph, that first session today was fantastic. I'm already looking forward to Friday. Would you be able to do some Q&A sessions from time to time, because I'm a newbie and I have a lot of questions to ask you. See, that's another one there. Hi Joseph, greetings from the US. I just want to let you know that I really enjoyed your class this morning. Keep it up, bro. Looking forward to Friday. Raf, this one, hello from China. Your class very good. I like it. You say that's it, because I cover lots of different. That's why I do the courses in the morning and the evening as well, just to kind of give people a chance. Even if you're not from the UK, if you're of different time zone, you can still find time to attend the course. And even if you can't, you can still come and record the lectures. That's why I do it over Zoom, because you can record the lectures. This is another one. Joseph, you're a godsend. You're making me think like a professional trader after just one class. Thank you, bro. Keep up the good work, my brother. Today, thank you. So yeah, I appreciate all you guys, your messages and everything. And thank you so much. Like I said, I wasn't expecting this. I really wasn't expecting this. But I guess it's probably because I made the course so cheap. That's why people are. I mean, they have nothing to lose. They have nothing to lose. And feedback like this is only making me so I'm proud, and I'm grateful for that. So but anyway, I'm gonna end the video now, and I'll see you guys on the next video.